Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new trading day and of course a good one at that, given the fact that the cues coming out of global markets are extremely positive. Then we have a crucial match to watch out for today, the semi-finals of the Cricket World Cup where India will take on the New Zealand, and it's a revenge time given the fact that 2019 World Cup, we saw a very disappointing defeat coming in, so it's time to take revenge and we will be watching out for that today as well. But of course, over the next 30 minutes, we'll be talking about all the cues to watch out for, what levels one should be watching out for on the index as well as the Nifty Bank index. And of course, we'll also be taking all your stock related queries and we'll be posing questions to our technical expert about what to do with the particular stocks that you hold, or if you have any queries regarding particular stocks. But of course, before we go any further, let's take a look at the top headlines at this hour. Wall Street clocks its best day since April amid softer than expected US CPI data for October. The inflation print gives rise to hopes that the Fed may have come to the end of its rate hike cycle. Asian markets clocked strong gains following soft US inflation data. The Nikkei rallies despite the Japanese economy shrinking faster than expected in the third quarter. The GIFT Nifty also implying a start above that 19,700 mark for the Indian market. Meanwhile, investors will be watching out for crucial meeting between US President Joe Biden as well as Chinese President Xi Jinping. Crude trades flat with Brent around $82 a barrel mark on signs that tensions in Middle East could be easing. Uncertainty also persists over the US crude inventory report that will be released later today. Meanwhile, I also want to point out that the dollar index has tumbled, the most in a year after the softer than expected US inflation print. Among stocks in focus today, MSCI adds 9 stocks to its global standard index in its quarterly index review with no deletions. APL Apollo, IndusInd Bank and Paytm are key inclusions in addition to macro tech developers, Persistent, Polycab, Suzlon, Tata Communications and Tata Motors DVR. Tata Motors will also be in focus as Tata Tech's much-awaited IPO will kick off on the 22nd of November. And it's payback time as Team India will be looking to avenge the Kiwis for the disappointment in 2019. The men in blue will face New Zealand in the semi-finals of the Cricket World Cup today. India have a perfect record in the tournament, having won 9 of their 9 matches so far. Well, of course, all eyes will be on that crucial match between India and New Zealand today. But, with that, let's shift focus to the markets. Of course, joining me right now is Brijesh Ail, who's the head technical and derivative retail research IDBI Capital Markets, joining in this morning. Great to have you on the show, Brijesh. Would like to wish you a very happy New Year and happy Diwali. Going forward, we've seen that, after a very strong start to the Sambat, we did kind of fizzled out on Monday. But cues are looking fairly strong. In fact, GIFT Nifty is hinting at a rebound or reclaim of that 19,700 mark. Would you concur with the kind of levels that are flashing on the screen with respect to GIFT Nifty? And for the Bank Nifty, what levels will you be watching out for? A retest of 44,000 possible?
Yeah. Morning, Nandita madam, and same to you. Happy New Year. So the view remains extremely positive. I think the way the market, what we saw on the Muhurat day, the high of that particular day, which is 19,547, is likely to be taken out in today's session. And at those points, technically the 50-day moving average of the Nifty will also be taken out. So this is a very strong opening. So I think this should lead a run towards the 19,800. All this while 19,300 and 19,800 was the range which we defined for the Nifty, and I believe we are going to head towards the 19,800. By any chance, if this week we see a close above 19,800, then I'm pretty confident that the all-time high level, which is somewhere close to 20,200, 222 was the level which we saw previously. I think there are high probability we might see those levels in the during this month itself. So immediately, I believe 19,800 should be the higher side target for the Nifty. Even though today when market opens at somewhere close to 19,700, during the day some decline or by today tomorrow, I think we should be heading 19,800. I'm very extremely positive on Bank Nifty. The reason is because on Monday what we observed was at the 44,000 call option, at the call writers. they have unwinded their long short positions. So this gives us a hint that somewhere they are exiting their short position. So I'm pretty confident that Bank Nifty is poised for another 1,500 points in the higher side. IndusInd Bank is something which is very positive on chart. Slowly, the Axis and ICICI Bank is also contributing to this trend. I think Bank Nifty should perform as compared to the Nifty. Both the indices have a very strong positive outlook.
All right, positive outlook on both the indices. Of course, Nifty, in fact, could retest levels of 19,800. That's the view coming in, and stronger view coming in on Nifty Bank Index as well. Hold that thought, Brijesh. We'll come back and talk about specific stocks as well. But let me also bring on board Hemant Shah, who's the fund manager at Seven Islands PMS, joining in this morning. Great to have you on the show as usual, Hemant. Wish you a very happy Diwali and a very happy New Year going forward.
Thank you, Nandita, and wish you the same. And thank you for having me. And wish you all the Money Control viewers also very prosperous somewhat 2018.
Well, thanks a lot for that. But, let's shift focus to the markets then. Extremely positive cues in terms of macros. Of course, the US CPI print has cooled off more than expected. You have even the domestic inflation data coming in below 5% at 5-month lows, But, going forward, do you think this makes the case for an early rate cut? CLSA, in fact, has come out with a report on the Indian inflation print, and they, in fact, expect, an early rate cut by the RBI. Do you think the case is building for that?
Yes. So, Nandita, I think the interest rates in the US are peaking out. That is for sure. How fast the rates will fall or the rates will cut by the Fed is to be seen. And it has taken much longer than they, should have cut the rates. But we expect the rates should start cutting it from, reducing from December onwards. And I think in India, still we have time. We have enough cushion. The rates in India will not be cut soon. Till I think February, I don't think the rates are going to be cut, barring 25 bips here and there maximum.
All right, till February. So you're saying February is the time when we can look at a rate cut by the RBI, right?
Yes. Correct.
All right. So in the case of interest rates going south, which stocks or which sectors do you think warrant a buy at the current juncture? Given the fact that, of course, we've seen the FIIs turning into sellers for quite a few months now. But once FIIs return to the markets, as we turn more and more risk on, with the dollar, of course, also tumbling quite a bit, and US yields coming off below that 4.5% mark. Once FIIs return to the markets, what are the stocks or sectors one should look at? You have the likes of HDFC Bank, Infosys that have a high, FII, exposure. So do you think these stocks warrant a look at the current juncture? Some of them have also underperformed.
Yes, Nandita. So first thing, our view is that we are again looking for the new indices very soon. So if this is our view, then the index stocks should definitely move in the right direction, the positive direction going forward. And as you mentioned, I think the PSU banks and the private banks like HDFC, ICICI Bank, and of course Reliance definitely will help the Nifty and the BSE index to scale new highs. So mostly, I think the buying should come in PSU banks particularly. Even when the FI turns buyers, I think the private banks and PSU banks and select stocks, maybe like say Reliance, index weightages, where there is index weightage is high. I think we expect buying to be coming there rather than the technology side as of now, because technology is anyway overweight by the foreign institutional investors.
All right. I also want to get in your thoughts, on some of these names that have made it to the MSCI Global Index, right? You have the likes of IndusInd Bank, that this stock has managed to outperform its other private peers on a YTD basis. If you look at HDFC Bank, ICICI Bank, Kotak Bank for that matter, you will see that IndusInd is one stock that has given fairly positive returns in excess of 20% or thereabouts. Also, the likes of Paytm and Suzlon have found themselves, in the MSCI Global Standard Index. Any thoughts on some of these stocks? IndusInd Bank, how is it poised versus its private peers going forward? And Paytm, of course, now that it has, turned profitable, do you think it warrants a look at the current juncture? Going forward, do you think the outlook remains positive on this one and the tide has turned?
Yes. So IndusInd Bank, with respect to the peers, definitely the valuation is in our favor. And it has given good returns in last 2 months, almost 20%, as you said. But the performance of the bank has been absolutely fantastic on all counts, whether it's NPAs or whether it is growth or whether it is, the balance sheet strengthening. Everywhere it has performed well. And no wonder it has given 20% return, and inclusion in MSCI index was definitely warranted. And coming back to Paytm, yes, we are positive, but again, the journey for Paytm is going to be much more long term in terms of the performance part, in terms of the profitability. So yes, there is definitely good, strong comeback with respect to the bottom line also. But I think in terms of the good profits or voluminous profits, I think we are a little bit far ahead still to see it. But still we are positive, yes.
All right. That's a positive view coming in on Paytm as well as IndusInd Bank. But of course, power stocks have been all charged up. If you look at some of these, names like REC, PFC, they have seen very strong earnings as well. And we've seen the stock prices also reflect the performance, right? So how would you play some of these power stocks now? And also, I want to talk about other PSUs like Coal India. Now, this stock has risen to an 8-year high. Numbers have been strong. How should one now play the PSU pack? Do you think they have run up quite a bit and perhaps wait for dips to buy into them?
Yes, I think the run-up is strong for sure. I think PFC and REC, I think one should hold rather than for a fresh entry. But Coal India, we are again positive on the back of the power demand. The demand for coal is not going to be slowing down anywhere in the near future. And again, the stock is much stronger in terms of balance sheet. 15 rupee dividend yield is amazing. The virtual one of the largest player of the coal. The sector is dependent on Coal India actually. So I think we are very positive on Coal India, but we would wait for some time to correct to buy PFC and REC, just because the stock has run up quite well.
All right, wait it out before you nibble into a PFC and REC. But last two questions for you, Hemant. First of all, some bit of consolidation has been witnessed in the broader end of the markets, which have, of course, run up quite a bit. Do you think more consolidation is on the cards, or do you think we will resume the kind of rally that we have seen in the mid and small cap end of the market? And lastly, what are you advising your clients to look at the current juncture, given the fact that we are entering into a volatile year? We have the US election, we have back home we have the general elections as well. So going into such a crucial year, what are you advising your clients to look at the current juncture?
Yes. So basically our view is, as I said, we are expecting new indices. I think indexes will scale new highs very soon. And we are positive on the markets on the back of the strong quarterly numbers as well as the, India GDP. So India is the only country, Nandita, actually, or one of the few countries in the world where there is predictability of growth. Okay, so I mean, we are very positive on India, and there are reasons for us to believe that India will scale. New indices is I think very nearby. We are going to see new indices very soon. So what we are advising our clients is basically to focus on the stocks where there is where the companies are manufacturing, say they are import substitutes, right? So I think that's the space where we are very positive on, whether it is pharma or whether it is any even specialized technology, everything is fine. And capital goods, the railways, infra, these are the space we are recommending quite aggressively to our clients.
All right, railway and infra, this space looks extremely attractive as we step into the elections. With that, Hemant, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure chatting with you.
Thank you, Nandita. Thank you so much.
Well, with that, let's go back to Brijesh and talk about specific stocks. Stock of the day for me today should be Grasim, given the fact that numbers came out. Profit was down 17% or thereabouts, revenue down 4.5%, even though on a YOY basis they have inched lower, but of course they have managed to top estimates, and margins are at 9.2% vis-a-vis 14.2% on a YOY basis. Operationally, the quarter is not all that strong for Grasim, but if you look at the stock, over the last 1 month, it has lost some bit of mojo, and in the last 6 months, it has done fairly well, 11% gains or thereabouts. But recently, it has come under pressure. However, we know that it will be entering into the paints business, and the launch of the paints brand is on track, the fourth quarter of the current fiscal. So, going forward, how should one play Grasim as we await its entry into the paint segment?
So specifically Grasim, I think somehow the volumes are missing, so which defines that the fresh buying is missing as of now. Eventually, till the month of September, there was a good amount of buying, and after the month of September, it has moved into sideways. And recently, maybe before the result, there was some rally, but then it is again, since the volumes are missing, I think this levels of 1950 is going to act as a resistance zone. There's a probability that 1900 levels will be broken. So there is a fear of this. So 1850 is the best level where I think the re-entry can be done. Only after looking at the volumes. If volumes starts picking up at 1850, 1880 level, this is the lower side reach. If those volumes are there, then I think that buying can be initiated. But right now, at this point of time, I believe this 1950 is going to act as resistance. There was a selling on the Monday session also. The stock was down, and it says right now it's sideways to negative, slightly negative, maybe from the trading point of view. 1850 is what I'm looking at the charts. So near to that, we can have a bullish view.
All right, 1950 will act as a crucial level on Grasim. Look forward to that. And of course, volumes have been missing. So once volumes pick up, perhaps this stock, could go higher from here. But let's also talk about an Aditya Birla Fashion. This stock has also been fairly sideways over the last, over the last 1 month or thereabouts. In fact, we have a brokerage view on the stock this morning. Citi has a buy rating on the stock, target price at 270 rupees per share. In fact, it expects profitability to be volatile going forward due to high operating as well as financial leverage. In fact, profitability is expected to improve only in FY25, led by recovery in demand. EBITDA estimates have been trimmed by 6 to 7% for the period of FY24 to FY26 by Citi. Looking at the stock, as I mentioned, it has been fairly sideways. For somebody who's holding on to this stock, what should the strategy be? Should they look at booking partial profits, or should they hold on to it and wait for some bit of recovery to kick in? Where would you, or how would you expect, or how would you advise investors to play this one now?
So basically, what we can see in Aditya Birla Fashion is that the one thing for sure is the stock has made a bottom. So this lower levels of 200, 250, the bottom formation is made. Now somewhere this accumulation is in the process in the Aditya Birla. So this is one of our pick, and I think it is going to outperform in the near future. 230 is the trigger, as in this is a technical trigger. So as and when 230 levels are taken out, I think it will clearly fetch for 280, whatever the target it looks like. So pretty positive on the counter. Only the hurdle on immediate basis is 230. I think maybe in the near term this hurdle will be taken off. Somebody has a position, can hold the position. If somebody wants to make a fresh position, I think one should initiate a fresh longs at the current level.
All right, that's the view coming in on AB Fashion. It remains one of the top picks of Brijesh as well. But let's take up some viewer queries that are trickling in this morning. The first one is coming in from Funny PG. Wants to know your thoughts on a West Coast paper. Now he's bought these shares at 754 rupees 30 paise. And he wants to know what he should do going forward, given the fact that he is making marginal losses on this one. Would you advise him to average out, or would you advise him to hold on to it?
Both the scenarios are possible because the overall the structure for the paper stocks as well as this West Coast paper is positive. So if he is willing to average, he can average because 680 is the average point because the from the risk reward ratio, if the favorable levels for averaging is 680, so near to 680 one can average. If averaging is not an option, then we can hold on to the position. I think 900 plus can be seen in the counter over the next 7 to 8 months. So view is quite strong. So one should hold the position.
All right, hold on to your position. I hope that answers your query. But the next one is coming in from Naveen, wants to know your thoughts on a Jindal Steel and Power. Stock hasn't done all that, well over the last 1 month or so. But I think some of these metal stocks have been, looking to make a comeback. They've been attempting to recover or lose some, recover some lost ground. Going forward, JSPL, how is it looking on the charts?
Yeah, I think JSPL is one stock which has taken support after the recent correction. So this monthly low, which is at 581, I think that should be the stop loss for all the long trades. With that base, if somebody wants to take a call, I think 750 plus is what should be the short-term target for the counter. But having said this, this current month low, which is at 580, that should be the trailing stop loss, or maybe the stop loss for whatever the long positions we take in this particular stock.
All right, that's the view then. I hope that answers your query on JSPL. The next one is coming in from Trilok, wants to know your thoughts on Raymond for the short as well as long term. The stock ended at day's low on Monday. It was down somewhere around 3% or thereabouts. For the long term, what are the kind of levels you'll be watching out for? Would you say that a retest of 2200 is possible? And what are the kind of downside levels you'll be watching out for on this stock?
I would like to have a cautious view on the Raymond. There are two specific reasons. One is in the month of September, there has been a distribution. Profit booking has been, I can see a profit booking. And from the technical perspective, there has been a negative RSI divergence. So this is slightly a cautious thing. I think the probability of Raymond's touching 2200 on the higher side looks unlikely as of now. There are much chances that maybe it may come close to 1450, 1500 levels on the downside. So views remain slightly negative on the counter. Somebody who is having a position, I would advise to book at the current price, and maybe in the near future, if it comes close to 1455, 1500, then we can review it. Right now, profit booking would be the best solution.
All right, profit booking would be the best, strategy on Raymond at the current juncture. Hope that answers your query. I want to get in a query on BSE, Brijesh. Raja Sachin wants to know your thoughts. Of course, over the last 5 sessions itself, we've seen a 25% kind of an up move coming in on BSE. Looks like there's no stopping this one. How should one really, play this one? You think they've missed the bus on the kind of rally that we have seen, and right now it's a little too expensive to buy into it? And on the upside, what kind of levels will you be watching out for on the charts?
Yeah, I do agree. It is a bit expensive. It is over expensive. Technically, there are no reasonings which tells me that we can make a fresh entry. Since the trend is positive, all the time frames, monthly, yearly, weekly, quarterly. So somebody is having a position, please hold on to the long position. 2600, maybe another 300, 400 points on the counter, on the chart, on the stocks can be there. But fresh entry cannot be made. The thing what we can do is the previous week low, which was 1774, can be the trailing stop loss for all the long position. Trend is positive, so anybody who's having position should hold on to this counter.
All right, that's the view on BSE. Hope that answers your query. But I think we just about have time for a couple of more queries. Yash Nayak wants to know your thoughts on a Delta Corp. Of course, we've seen the stock shave off quite a bit, on a YTD and 6-month basis. But in the last 1 month, we did see, the stock attempting to make a recovery. But 140 at the current juncture, how much of a downside do you expect on the charts for this one?
I feel the downside is protected as of now. This 122, 120, 122 is the level of the last month. I think that is going to be protected at least for the next couple of weeks. Technically, it is in a downtrend, so we are not going to recommend any buy call. But then somebody who's having a position can look to exit whenever it bounces back to 170 levels, because that is the gap area from where the breakdown has come during 25th of September. So somebody having a position, don't average the stock, but then there will be definitely there will be one bounce back in the counter. 170 is the gap which it needs to be filled. So closer to 170, 165, I think one should review or should exit the position.
All right, that's the call on Delta Corp. Avoid averaging it, but the downside seems to be limited as of now. Last query for the day. This one is coming in from Vijay, and he wants to know your thoughts on a DreamWorks. This stock has had a fairly good run. On a YTD basis, it's up nearly 40%. But over the last 1 month or so, it has kind of managed to lose much of its mojo. Going forward, what are the charts saying for this one? How's the setup looking like?
It's green.
DreamWorks.
I think the overall structure is positive. I think if somebody is having a position, please hold on to the position. Giving a level should be a bit difficult. I think it's a hold view for the right now at the current price.
All right, hold is the call on DreamWorks. Vijay, I hope that answers your query. But with that, we've come to the end of this query segment. But before I let you go, Brijesh, what are you recommending for our viewers this morning?
So there are 3 picks. I think one is the L&T Finance Holding. I think it's extremely bullish. I would recommend a buy at the current price. The stop loss would be 140 for the price target of 156. Second one is the Zydius Life. So in the 3-4 days before, there was a very good volume breakout and the stock is correcting back. So it's again a very good buying opportunity. At the current price, one should take a long idea with a stop loss of 608. The target would be 648. And one more stock which is coming into momentum is the CIE Automotive. So with the current price, one can take a long position with a stop loss of 472 for the price target of 512. So these all are the trading bets. I think with the market, I think this should perform well.
All right, those were the recommendations coming in from Brijesh. With that, Brijesh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us and, of course, answering all of your queries so patiently.
Thank you.
Well, before I, sign out of here, let me remind our viewers that Tata Tech IPO, the much-awaited IPO, will be opening for subscription on the 22nd of November. Remember, this will be the first share sale by the group firm, by the Tata Group, in nearly 2 decades after the successful listing of TCS, right? Remember, Tata Tech had cut its IPO size by more than a third. In fact, the issue size was reduced to somewhere around 6.02 crore shares versus 9.5 crore shares earlier. Now, it will be entirely an offer for sale, where Tata Motors will be selling 4.62 crore shares and other shareholders will be, offloading the rest of the shares. And the price band, valuation, etc., these will be announced closer to the IPO date. So that's one, focus area when it comes to the primary markets. This has been a much awaited IPO, given the fact that from the Tata stable, this will be the first in nearly 2 decades. Aside of that, we have a new listing to watch out for today, Ask Automotive. That will be debuting on the bourses today. Issue price was fixed at somewhere around 282 rupees per share. So we will be watching out for this new listing at 10 a.m. You can, of course, log into moneycontrol.com and find out, more about this particular listing and, of course, what analysts are saying as to whether one should look at this stock or avoid this stock. But with that, we're completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. Of course, coming up next is opening bell. So stay tuned for that. It's a goodbye from me. Stay tuned to Money Control for more news and updates.